The use of tax haven is a technique which allows people and organizations to pay less tax. The term tax haven is used to describe any country which offers to citizens and businesses lower rate of tax than your nation does. There is numerous of tax haven in the world allowing people to pay lower tax rate, such as the Luxembourg, Cayman Island, Bermuda, Monaco, Switzerland, and many more countries. As I said earlier, tax haven allow both people and organizations to pay less tax. But how they do it? Let's look first on the organization side. One of the most common way organizations utilize tax haven is called corporate profit shifting. To explain you this concept in a simple way, it's occurs when a company registers its headquarters in another country which have a lower rate of corporate tax than their native country. Let's take France and Bermuda as an example. France's corporate tax rate is 33.3%, so if the French business moves its headquarters to Bermuda, they will pay 0% of tax rate, allowing the company to drastically reduce its tax bill. Let's talk about the major tax avoidance. Vodafone, the global telecom giant established in UK, made a worldwide profit of $2 billion in 2016, but has paid no corporate tax in UK for years. Apple, the US giant, made more than £1 billion British pound worth of sales, yet they paid less than 30 million in corporate tax. A major part of its income has been channeled to its Irish operation, which enjoy a lower tax regime. Finally, McDonald's. The fast food has been reducing its tax bill by channeling money to a company in Luxembourg set up to receive franchise and royalty fees from outside the US. The Luxembourg company made profit of $570 billion but paid tax at only 0.7%. Alright, so now we know how companies make profit by using tax haven. But let's see how it works for individuals. One option is to become a resident of a country which have a lower tax rate, such as Switzerland, allowing them to pay less income tax than they would have done in their native country. However, another method exists. This method allows people to live in a high-tax country while paying their tax in a low-tax one. This is done by trust. A fund trust is an arrangement whereby a person, called trustee, holds property as its nominal owner for the good of a beneficiary. The beneficiary can access his money or asset anytime. Thus, the beneficiary pays no tax for his asset in France. One of our reporters filmed an exchange between a beneficiary and a Swiss trustee. As you can see, the money contained in this suitcase by the beneficiary is taken by the trustee, which will carry the money in Switzerland. The legal owner of this money is now the trustee and will be taxed in Switzerland. However, the beneficiary still has full access on it and can bring back the money in France to use it. An American entrepreneur, Mr. Anderson, made his million after the breakup of AT&T. He was convicted of the largest tax evasion scam in the US history for evading more than $200 million in tax. It is reported that in 1998, he paid $495 in tax on more than $70,000 of income per year. Now, we know how people and organizations use tax haven at their advantage. But it's not without any consequences. A taxpayer that willfully attempts to evade paying income tax is subject to criminal and civil penalties. In the US, attempts to evade or defeat paying tax is punished by imprisonment for no more than 5 years, a fine of no more than $250,000 for individuals, or $500,000 for corporation. The victim of tax evasion are governments. The Tax Justice Network estimated that the corporate and personal tax avoidance cost the world government $700 billion a year in lost tax receipts. The number one in tax evasion is the United States, with an estimated cost of tax avoidance of $190 billion, followed by China with $66 billion and Japan with $46 billion. One of the solutions brought is unitary tax. This would involve taxing multinational corporations according to the real economic substances of where they actually do business. Another concept is called country-by-country reporting. Under country-by-country reporting, the multinationals will have to break their information down by country of operation, including in each tax haven, so that citizens and authorities can see what the corporations are doing in their countries. Finally, the last solution found is increasing the information exchange. Developing countries and rich ones must get the information they need to tax their wealthiest citizens properly. We hope you all have now a better understanding of what is tax haven. Thank you for watching.